I mean, I can do this in one column, but as you know, I'm anal about making things piece by piece, building, equipment, and land. When we talk about net capital spending, we're talking about expenditures on long-lived assets or fixed assets. Well, in year zero, obviously, we spent $5 million to make the building. We're going to spend $25 million for the equipment. How about the land? Should I put anything in there? What do you guys think? What do you think? Don't just nod. Tell me what I should put in. Why is it relevant? The company already owns it. Yes, but company already owns it. You're not going to spend any money at all to use that land to make that building. Exactly, that's what I wanted to hear. Because if we don't go ahead with this project, the firm can't sell it in the market. That's why we have a standalone principle. It's as if we're buying that land from the firm. Even though the firm is not spending real cash, the project is, in this case, borrowing the land from the firm. They're buying it at 20 million. 5 years from now, they expect to sell it back at 25. Okay? That's why it's relevant. And so in year zero, I also have, I'm not gonna put in hard-coded numbers, market value of the land, not the cost of purchase 10 years ago. That's gone, that's only for accountants. Obviously, there are no fixed asset expenditures, at least in this example, in the intervening years. But in year 5, we have something. What do we have? First, we're going to return the land to the firm. So that's a negative expenditure, right? Market value of the land in 5. If you want to be conservative, you can use the current value. In a sense, you know, you're renting, if you think about the project renting the land, that would be more proper. But since it's parametric, we can always change that. What about building and equipment? Is there something going on in year 5? What's going to happen when I'm done with the project? While you guys are thinking about it, I'm going to basically add the expenditures on these. Or let me not be pedestrian. Sum is a more techie way of doing it. That way, if you have 4 inputs, you can always do that. Which means I'm going to get all of these. What do you think? Am I going to do something When I'm done with the project, what am I gonna do with the building? I'm gonna salvage it. So I'm gonna take the after-tax salvage value. Same thing with equipment. That's why we calculated those. I mean, they also had the side benefit of calculating all the depreciations for us, but that was the primary reason why we had those sheets. Oh, since these are revenues, they're negative spending. When I was teaching my kids basic arithmetic, second grade, that's how I taught the meaning of the negative numbers. It says, you spend $10, that's positive, and you get $10, that's negative spending. I don't know any other way. I'm sure there are, but that's my way of thinking about it. So we took care of net capital spending as well. The only thing we have to worry about is change in net working capital. Well, the way we set it up, we're going to spend those monies about a year in advance. We already know percentages of the sales. So let's actually copy this. Formatting. You can apply. You can format individual letters with different fonts in Excel. Remember, this is a standalone firm, standalone project. So initially it had no net working capital. Now it will. And it's gonna be, let me do it this way. Old. Net working capital percent of the new times from the income statement sales of the new. Okay. And the years after that, it's going to be the percentage times, since we're looking at the change, we're going to multiply that with the change in sales. So addition to net working capital with respect to old, not old, I'm sorry, this should be new. Okay. Right? So first year we put that much in net working capital, second year we add 562, 500 more, and so on. But all of that is going to be returned back to the firm when the project is done. Remember, firm spends that money. When I'm done, all that money goes back to the firm. That means I'm going to get negative of the sum of those. So at the end of year 5, we're going to return 7.45 million back to the firm. We're going to do the same thing with the old. That's going to be much simpler. Okay, let's make this parametric in case I change my mind and there's a growth rate in the old sales as well. Yeah, I should have done the same thing here. I knew there was something wrong. The reason that's positive, initially, since we have reduction in the sales of the old, we're actually reducing inventory and accounts receivable relative to that. At the end, we have to put that back in essence. So